Yeah. Why? What's going on? Nothing's right. I'm torn. CPI, man. CPI. Yeah. Yeah. And you're like, well, that's just another trading day. Sure. Anyways, good morning. It's early on Wall Street, about 3 hours before the open of trading. This is what we call QuantBox Live, your hour of power in the AM. Of course, this is London lunch, so maybe it's lunchtime for you. In either case, this is our opportunity to go through the global macro and make sure that we are trading a trend. And if there's no trend, we are trading relative strength or market sentiment. Otherwise, there's no basis to your trading. You're just randomly trading a random market. Well, I think we all started that way. We've all tested that philosophy of random trading in a random market, and we did not get consistent results. So instead, what we do is we look at things like the technical trend. Okay, sure. Then we look at seasonal forces. We look at current GDP levels and inflation levels and employment levels and interest rate levels and institutional positioning levels and retail positioning levels. Add them all up and do comparative analysis. We also look at the stock and flow of capital around the world. That's the longer term trends. We look at the monetary policy of central banks. This is so important. I'm going to add a second page that basically does the same thing. Why? We're going to use different pretty colors to tell you the same thing. Again, why would we do that? I think it's important that one of them, I guess if I have two things that tell you the same thing, one of them will appeal to you more. And that's what I want you to have, is the background or the thought process or the opinion of the central bank leading your trading strategies, not your opinion, and certainly not somebody on TV talking about what they would do. We're not interested in that. We also have to look at what's happening now. I mean, yes, having the long-term idea, like that previous image I just showed you was QuantBox showing you the next 18 months of interest rates and inflation, told to us by the central bank staff. We pull that data directly out of the central banks. Actually, technically, indirectly out of the central banks, but it is central bank opinion. But this, what we're looking at here, tells us what's actually going on right now. Doesn't matter what the long term is. What's the market doing this morning? What have they been doing all week? What have they been doing all month? So now that's market as well as economy. Two different things, long term, short term. And when you add all that up, it'll make you a more sophisticated trader. You're like, wait, I don't want to be more sophisticated. Okay, well, then when you make decisions based on what you believe a trend to be, you'll have the confidence to let your winners run. Right now, we haven't had a trend for 5 weeks, and you know that because QuantBox tells you it all the time. Every day you should be logging in going, no interesting trend. There's nothing to hang on to. The confidence to let your winners run, there's no confidence in the market for your winners running. So now you're taking profit more short term. Anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, folks. Focus on the long term, never risk money. Okay, I had a big meeting yesterday in regards to the AI alert service. Once again, I'm going to tell you, we're getting closer and closer and closer to this launching. Very, very close. Let's go into the Pro. Make sure I'm in the right email. Now, for those that have subscribed to the AI alert service, you've been getting them daily reports via email. So that's going to very quickly change to twice a day uh, reports or updates about what QuantBox has seen change. That's going to be the next step. Then the third step is the twice a day you'll already be doing that. That'll be. And then the alerts, the actual alerts sent by text, that will be the third. And we're very close to getting to all of that. So cool. Hang on. We're almost there. All right. Here we go. Come on now. Why am I stalling out? Ooh. I guess I need to reboot my machine. Holy smokes, was that slow? All right. So, anyways, yield. Man, about the same. Of course, I want that to be closer to 4. Okay. I want that to be much closer to 4 than it is, but it's not unexpected. And today's probably going to move the market. Today, we have CPI. And CPI is a big deal, obviously, to many traders. And they think they're going to learn something new about the Fed. Now, I would disagree with that. You'd have to have something so ridiculously high or so ridiculously low to change the Fed's opinion. But nonetheless, we're going to get some volatility today. Okay. Okay. Now, Boris says, hey, in regards to inflation and gold, well, again, this your question, I believe, just fits right into it. Nothing's likely to change dramatically one way or the other, Boris. So the market expects 0.2. Is it going to come out 1.1.2? No, it might come out 0.2, 0.3, 0.4 on the high side. Would that be enough to put a gold trade on? Probably not. And is it going to come out not disinflation, but deflation? Are we going to have a negative 0.2? No, probably not, Boris. So I'm neutral on gold fundamentally. Okay. Taken literally, one could argue that gold should go down either way. Probably. I would just say, look, we've been stuck between 2050 and 2000 on gold for a very long time, and I don't expect that to change. The change for gold will be when monetary policy changes. So what your question goes right into this, like what I was saying, lots of the market is poised to figure out if the Fed's going to cut interest rates in March. Well, they've already told us they're not, but for some reason, people are still debating that. And then they debate, well, if not March, then May, right? Then the one after March. I still think that's incorrect. Why do I think all of this? Well, when the market said 6, I thought they were wrong. When they said 5 cuts, I thought they were wrong. Now they're thinking 4 cuts. Well, the issue is the Fed told us 3 cuts. So, if anything, the market is just I don't know, right sizing. So I don't expect anything dramatic one way or the other. Maybe some volatility, but then we just go back to not March. So I guess they're going to cut in May, and now we have to deal with that until we get closer to May, and then they find out the Fed pushes back on a May cut. Then we go to June. So that's I think why the market is stalled out, huh? Okay. Oh, Boris says, well, you could say with the Red Sea being effectively closed, that could push up inflation. It could. Yeah, it could. You're going to see that on the good side. What people are watching today when it comes to CPI is services side inflation. Okay. Euro flat, Bitcoin back down below 50,000. Yeah, cool. Looking at the scatter plot. Oh, no, Let's not do the scatter plot. Let's looking at the gauges. Still nothing, guys. Nothing's happened this week. Nothing's happened this month. You're like, but things are moving up and down. Yes. It's like this. Let's do an analogy. You're on a raft at sea. And the raft is going up and down, left and right, up and down with all these waves and waves crashing against other waves. And okay. And you're just bouncing around, but there's no current. So after spending days at sea, going up and down, left and right with all the waves, you find out you haven't moved. You're still in the same spot in the ocean. There's no current. That's what you see here. You haven't moved anywhere. You're still in the same spot. So be very careful. Okay. I've asked the developers if we could add the put call ratio to this. I think that'd be interesting to see how the options traders are playing it. Right now, I believe they're more risk on than they are risk off. But it'd be interesting to see if they shift. You see, that could be, and you could throw it in there. If so, now not only do we have dollar, would we have dollar and yen and the stock market, and what you could call, I guess, a bond market, and then you have like a commodity market like gold. Then you throw in volatility, which is a measure of options on the S&P 500. But then if you had the put call ratio too, yet another sort of separate market of investors and traders trying to do the same thing, hedge their position or make money, it's another group of traders to listen to and pay attention to. Are they bullish or are they bearish? Are they risk on or are they risk off? So we'll see if they can do that. I know we can get the data. All right, so Bitcoin hot to go, HOTTOGO. We got to get rid of that. And the Japanese stock market on fire. Holy smokes, that is cray cray. Look at that big move. Cool. I was thinking about your question some more, Boris, and maybe it also suggests gold's not the best way to trade or invest right now. That's already my opinion because we don't have inflation, we have disinflation. Um, but my own behavior, so like I have to figure out if I'm going to hedge my own pension. So, right, I oversee my pension fund. Right. Okay, cool. Um, do I put a hedge? Do I actually sell the stock market to hedge it? Do I use options to hedge it? Do I not hedge it at all? These are questions that, and today's CPI is really going to force people to make such decisions. And so that's what you're talking about. Like, will it create a strong dollar? And would you need to hedge? And if you hedge, would it be gold? And if it's not going to be gold, what would it be? Well, the long answer or the short answer to that long setup is that 15% of my portfolio is cash. The cash is a hedge. I'm not in, I'm out. It not trading is a position. And so I'm hedged by not deploying my capital and I'm keeping that powder dry to buy it in a few weeks if the market comes down. You see? So the cash is the hedge. But I might convert that cash into an options or an ETF that would hedge. And so it's the convert that, do I convert or not convert? Me. I got my Monday morning frog in my throat. All right. Me. All right. Yeah, I don't even want to look at this calendar. So I already know what's on here. So and I can't find it. So, anyways, we're interested in inflation in the United States today. It's only Tuesday. I see oil inventory, but that's not today. How funny, can't even find. Did you guys trade this one? I think it was in my day trading group. This is the pound, right? I looked at statistically using the new technical AI. It analyzed the last 12 British employment changes, up and down, and better than expected, worse than expected. Is it going to be here? I don't even have it here. Does anyone remember what it suggested based on just simple analysis of what has happened in the past? You got to get smaller time frame. I think it was like I think it was like 82% chance this would go up. Okay. Ruben says, I have a question about the alerts. Is it based on which alerts? Fundamental alerts at QuantBox or the new technical AI that I'm starting? QB or traders? Oh, it's scalp spot swing and trade. So it looks at 15-minute charts, 30-minute charts, hourly charts, 4-hour charts, and daily charts. Yeah. So it looks for patterns on all of those things on 125 assets. And on all those time frames, it's looking for 12 patterns that it recognizes. So it's 7,500 charts it's watching. And then it'll say, Ruben, here's the 4 things that are working right now. And the probabilities. Yeah. It's really good. I'm telling you, it's really good. It's I I don't know. It's really good. All right. So let's get back. Let's just look at the stock market, and then that's that. And this is what we talked about in the day trading group last night. We were responding to this. Where's my drawing tool? There we go. Responding to this. And then I had it coming down to here, which is now done. So that took 12 hours. So that was literally last night. And then I think if it upped and downed, it'll be a real problem for the bulls. Like, of course, the other thing you could do is just head down to the 55. Usually the market doesn't do that. So I teach in my book strategic and tactical forex trading. I use forex as an example. And so the S&P 500 doesn't have to behave just like forex. But if it was Forex, the way I describe this is that you usually don't get a V-shaped reversal, like you don't get a V-shaped recovery. So in that case, you get the big down. And what I'm suggesting is, should you worry about it falling hard and fast? Like that's it, that's the total collapse? Maybe. But what you should plan for is not sort of a maybe. You should plan for the idea that not everybody's on that clue train. And you get something more like that. And even sideways and then a break. Meaning not only does it head back up before it heads down, it could do one of these things for a while, right? And then a breakout. Cool. So, anyways, Ruben, I hope you like that technical service. The more I uncover the data that's there, the more I uncover things like it's giving us probabilities and direction pre-news events. So, like I said on that pound trade on the UK jobs report, it looked at the last 12 of them and then pulled out a pattern. They're like 82% it's going to go up no matter what the news is. I'm like, what? Pound dollar? Oh, but also Aussie dollar and euro dollar. Cool probabilities, not guessing probabilities of just what has happened to that particular news event, to those particular currencies, month after month after month over the course of 1 hour, 2 hours, 4 hours, 48 hours. It just shows you like this is actually what's happened. And it'll pull up the charts if you want it to. And they're like, look, I'll show you the charts. It shows you the charts of what happened, let's say 11 UK unemployment reports ago. You can just pull it up and it's like, this is what happened. And you're like, oh, snap. Ooh, snap. Like, ooh, wee. And like, wow, dang, we could use that, right? So the data's there. It's just how do you use it? And I'm like, whoa, whoa. Anyways, so this is very bearish. As a bull, you would need to do something about it. And like I said, I'm already in cash. Should I put my triple 3 times, right? Triple short hedge on? Maybe. So the one I did last time was SPXS. SPX is the S&P 500. S is short, and it's triple leverage short. And I think it's an ETF by direction, I guess. But so that might be game on today. So that's why I'm looking at it on a day 4 hour. And here's the daily. It could come down to the old resistance, which would now be support, where the future daily 21 will be. So probably around 49.50, or I ride it up. I prefer to do something than nothing because I feel like as technicians, this is pretty important. Okay. And this will change us probably, I would assume, to risk off. But we don't see it yet in QuantBox. We haven't seen it across the board in all asset classes or markets. So don't get too excited yet, but that is definitely a level of concern. You can see I essentially have this set up as a Head and Shoulders, right? Last night, you can also see that I had it set up and then down. And what it did is it took longer to get there, right? Didn't go as high and it took a little longer. But I wasn't wrong. So this will be a day. And then, of course, if inflation comes out hot or as expected, this could bring it down even more. I think the market expects 0.2. And really what you want to look at is the good side. And this is Boris's comment on the Black Sea being, the Red Sea being closed, and you have to go around. That adds costs. Costs going up for goods being shipped is inflationary. Okay. And then we're actually looking at the service side, because this has been the source of our disinflation since the COVID supply chain issues. And then we're trying to see if wages on service in the service sector will come down. But if this stays the same, S bar, and G goes up, and this comes out 0.4, not 0.2, that would be surprising. And then the logic is, well, with that kind of inflation, there's no way the Fed's going to cut in March, and probably not even in May. And then you get this dollar strength move. Okay. Yeah. And I'm at the point where that's so not surprising that, like I said, 15% of my retirement account is already in cash anticipating this. Okay. Like, I have a meeting with the Council of Investment Advisors on how to invest that money 6 weeks from now. We're already prepared to buy 6 weeks from now. So if this falls for the next 6 weeks, I'm like, dude, it's in our schedule, you know? Okay. Anyways, so I'll let you go. I think that's enough. This obviously is what we should be watching. I'll be doing Forex.today over on YouTube. And then today at investorbootcamp.com, we have our swing trading, day trading group meeting. And we will be downloading and reading the actual fundamental reports from the central banks and other governmental agencies that track all this economic data. Very cool. So I will see you later today, I am sure. Yeah, I am sure. So peace on earth. May the pips be with you. May your profits be above average. And I'll see you real soon.